Hi guys, it's Josh Rubin here on November 4th, 2022. I'm joined by Mark Chin for this week's Insider. Mark, we're seeing a return of bidding wars.
Yeah, it's surprising considering how much bad news there is in the market. But before we even get there, let's which is our headliner, let's go down and take a look at some of the data that we've got. And sure. A few weeks ago, we introduced this concept of the insider index. This is the ratio of weekly price drops to number of contracts signed. And of course, if there are a lot of price drops in the market, that's indicating that sellers are feeling nervous and are capitulating their asking prices. And if there's a lot of contracts signed in the market, it means buyers are doing stuff. So the ratio of these two things together gives us a very good idea of market sentiment. And recently, it's been rather high. So you'll see it looks like it topped out a couple of weeks ago, but still insider index above 1.5%. That means it looks like we're in a buyer's market. And this is kind of surprising given the bidding wars that we've been in, Josh.
Absolutely. You know, it's interesting because I think that it is a sign that buyers are seeing value, but more importantly, not just buyers, but also the market as a whole. And so we sort of have reached this level where people are being attracted to opportunities and realizing that this is not going to last forever. Oftentimes these windows of opportunity, like the summer of 2020, or the fall and early winter of, say, 2000, 2001, or the fourth quarter and first quarter of 2008 and 2009, are these sort of 4 to 6 month windows where there's this capitulation and there's this reverse of the upper hand from the seller's market to the buyer's market, and buyers swoop in knowing that buyer's markets in Manhattan do not last. And if you think about it too long, you're going to miss out on opportunities. And we are seeing some great value out there.
Yeah, and the interesting thing is, if you look at contracts signed, in the last week we saw 327 contracts signed in that 7-day period. 30 days ago, that same 7-day period was 376 contracts signed. A year ago was 1,134. So, you know, the really interesting thing is that these bidding wars are starting to happen at a time where, looking at all the summary statistics, you would not believe it's happening. Let's take a look at the price points that they're happening in. So let me just back up and say the Rubin team does a lot of transactions. We're the #1 team for unit count in resales in this town. And I say that so Josh doesn't have to toot his own horn. And so we see a lot of transactions. And it was due to you, Josh, where you were like, you know what, there's bidding wars out there. I said, let's dig into this and get some data. So here it is. Something like 10% of the bidding wars that we're seeing are above 2 million. Around 30% are between 1 and 2. Fully half of them are under 1 million. And one of them is, I think, or sorry, not one, 10% of them are below 500,000. So we're not talking about the luxury market largely. We're talking about, you know, first and second homes. Secondly, where are these happening? So we just highlighted the neighborhoods in which we've been seeing these bidding wars happen. This is all in the last 7 days, by the way, and it's largely concentrated downtown. Josh, tell people though, where is the Rubin team's business largely?
The concentration is Manhattan, south of 96th Street. We have agents going uptown into Washington Heights. We have agents who are doing deals in, Battery Park and FiDi. I would say it sort of radiates from Union Square down to Tribeca and up to Murray Hill in terms of the concentration, but that's largely market driven. That tends to be, as you pointed out, where the concentration of activity is. But we have listings going live today on the Upper East Side. We have listings going live today downtown. And we're also doing some deals out in Brooklyn, and I was talking to an agent earlier. Michelle is taking a listing for a multifamily in Sunnyside. So that's in Queens. That's sort of one of the what I call a sleeper neighborhood because it's immediately adjacent to Long Island City, but not nearly as popular, but just as convenient. And so you can get some better values there. But you know, we're driven by the market in that you know, we go wherever the market takes us. We're not going to say, oh, we can't help you in Sunnyside or we can't help you in Brooklyn, but we know those neighborhoods very well.
Yeah, and I think the Rubin Team's diverse spread of business aside, like one of the things that struck me about this data is that, you know, interest rates are up, as everybody knows. Stock market is wonky, and yet and number of contract signs are down, and yet we're seeing these bidding wars, and basically these people that are in these bidding wars are working people. They may have very good jobs and be very highly paid, but they're still, you know, south of $2 million apartments in the city. But the fact that they're stepping to the plate now and starting to look and see value suggests, one, they're confident about their jobs. So we think that the employment situation in New York City is very strong. As I said, except for if you work at Twitter or something like that, but across the board, it's very good. And secondly, the Insider Index does track price drops, and there's been a lot of them recently. And I think that's finally starting to attract buyers. I want to change the subject and talk about inflation for a second. You know, it's been an old adage that that real estate is a good hedge against inflation, and the reason for that is what inflates when inflation happens is goods and services, the prices of goods and services, and of course, the biggest, baddest good of all time is real estate, and so the prices of real estate itself tends to go up when inflation heads upwards.
Sure.
And so Avison Young did a study of what happens when you adjust real estate for inflation and look at the returns in real terms. And what you see is if you look at US retail or Canada retail, US office, Canada office, UK industrial, et cetera, you get down to the bottom there where it's UK residential, US residential, and Canada residential. And in residential is the only place where the rolling 5-year holding periods of 5 year, 6 year, 7 year, 8 year, 9 year, and 10 year all show 0% of the time are you in a negative return space. So as long as you have a holding period of 5 years or greater, these market segments, and in particular, I'm just highlighting US residential here, 0% of the time are you losing money in real terms. So that goes to show that this asset class is one that people should pay attention to and be putting money into.
Well, not only that, but the U.S. office market, I see on this index, tends to be quite high as well. So, if anything, people should be putting their money into, potentially some office REITs. You know?
Yeah, well, they've certainly been beat up recently, and their prices are down, so it might be a good entry point for sure. Josh, what are you looking for in the coming week before we hit people next week with the Insider?
Well, Mark, I think, keeping on today's topic of the return of bidding wars and renewed interest in the residential space is a seasonal shift going into the holidays here on New York residential. So we're seeing a pickup in activity. Anecdotally, a number of our listings that have been on the market, in this third into fourth quarter have offers on them. And so we're involved in negotiations in 3 other deals right now, 2 of which we should come to terms on today. So I think that that's indicative of a broader pickup in activity here as we head into the midterm elections coming up. So, in another week or so, we should know who the New York State governor is. And, then we'll be able to get past that. And it seems like, given today's jobs report, being stronger than expected. It seems like people are sort of shrugging off the higher rates and just accepting it as the cost of doing business.
Yeah.
And so I think that we are going to be on a more stable footing going forward, at least from my perspective. And so
I agree with that. I would agree with that. And I would say also, historically, if you look at what elections do to real estate, it just tamps down the number of contracts signed up until the conclusion of the election is known, and it doesn't matter who wins.
right.
It's just it's the uncertainty of who's going to win that sort of freezes people up a little bit and kind of takes a little takes people's foot off the gas with respect to signing contracts. But directly after that, which would be next week, we expect there to be a pickup due to the post-election effect.
Yeah. By the way, I should point out to you that my background today is none other than the private terrace of the penthouse at 161 West 15th Street, which is available. It's a 3-bedroom, 2-bath at 15th Street and 7th Avenue. Really great building, very unique space, and a great opportunity for anybody who's looking for outdoor space and a fireplace. That's asking $3.5 million, and it's moments from Google's headquarters, of course, and just across the street from the Chelsea Market, and minutes from the West Village, which is exceptionally hot. If this apartment were literally 3 blocks away in the West Village, it would be a $5 million apartment, but it is a great value at 3.5, and it's literally 5 minutes walking distance from the West Village, and even more convenient to the Union Square. So that said, if you'd like to see it, feel free to hit us up. But in the interim, thanks again for joining us on today's Insider. Mark, great job as always, and I want everybody to have a great weekend and look forward to being in touch.
Sayonara until next week.